Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Friday, 1 week left of February reporting season. What a week we've had though, an RBA cut, more tariff threats or talks, and of course about 140 companies listed reporting their numbers. Another 170 to go next week, but more at the small to mid cap end of town. Let's have a look at where we finished up. We started off pretty strong, and then the sellers definitely moved in the afternoon session. CBA, the market leader, continuing to be sold off, driving the overall market lower. And the ASX 200 actually set for a 1 month low. So let's get into those themes of the day as we hit this 1 month low on the ASX 200. Also talking about master of its domain getting this really big bid coming through from a US company, sending its share price skyrocketing. Also its parent company Nine Entertainment, which reports on Tuesday, did very well, while its main competitor REA was sold off. And the final stretch, we've only got one more week of February reporting season. We've almost made it. Of course, watch out for any potential cockroaches coming out next week, because often some of those not so great results do tend to come in just before the deadline. Let's have a quick look at some of the sectoral moves today, leading it off with the weakness that you saw in CBA, down 2.25%, dragging the overall financial index lower. NAB though, remember it was hit really hard on the back of its quarterly update. So, I mean, a 1 cent gain, not really going to take that as a massive win, but at least it didn't end in the red today. Having a look as well in what we saw with the miners, all looking pretty solid. Fortescue rebounding from its sharp sell-off in the wake of its results, up 2% to $18.60. Also having a quick look at some of the retail players. We heard from Wesfarmers yesterday. Shares today down 2%. A lot of analysts saying, look, the result from Wesfarmers was really solid, but it's a very overvalued stock. I also asked the CEO about the weakness in the Aussie dollar and whether that may be passed on to consumers later in the year. He couldn't rule it out, although he said that they maintain their low cost everyday mantra, and they'll be trying to do as much as they can to absorb any FX moves before passing it on to the consumer. Harvey Norman Premier Investments looking good. Lovisa, which reports next week, down 3.4% today. A quick look at some of the corporate stories out there as well. Obviously looking at Domain after confirming that the US online real estate firm CoStar has offered to buy it in a deal valuing it at $2.7 billion. Guzman y Gomez, we spoke to them. You can find that on our website. They say they expect to exceed full year profit, but shares were sold off today because their US business is not looking that solid. In fact, sales at their US business down 62% in the half. QBE had a very good result due to fewer than expected natural disasters. It did though flag that it's going to have about a $200 million hit due to the LA fires. Telix Pharmaceuticals doing very well after guiding full year revenue between $1.2 to $1.23 billion, and that was a very solid result. While Block CDIs were sold off today, the stock fell more than 6% in after-hours trade on Wall Street amid an earnings and revenue miss. A couple of other stocks we're watching. Newmont down 2.5%. Revenue did soar along with the gold price, but the gold price today is tracking lower, so a sell-off in those gold players. Yancoal also out with earnings. Ingham's, we spoke to their CEO. You can catch that interview online. And Accent had quite a good first half profit, so a lot of people buying footwear. It was up 12% to $47.2 million. Someone I'm sure has a great shoe collection. Let's welcome to the COB Shane Oliver from AMP. Shane, are you out there buying now the RBA has cut? Unfortunately, we can't hear Shane just at the moment. We'll see if we can fix. Is that?
Hello.
Oh, there we are. Yes. How are you going, Shane? The rate cut.
Yeah, I bought in advance, so I got in early. Buy on the rumor, sell on the fact, I think.
So just tell us why you think that the RBA rate cut that we saw this week is justified, because when you listen to Michelle Bullock, she did sort of sound quite cautious or hawkish.
Look, she did, but she also pointed out that they are more confident on inflation coming back to target. She pointed out that the numbers for the December quarter were lower than expected, that they were worried that there was upside risk to inflation, and those risks had receded. You can see in that chart there how inflation in Australia, the quarterly numbers for the underlying rate or the core rate is around similar levels to the UK and the US. UK is now a little bit above us, and the monthly numbers are actually in line with those in Europe and Canada. So our numbers aren't that bad, and don't forget Europe and Canada have both cut their official interest rates down to around 3%, so well below where we are. And the other factor, I guess, that Michelle Bullock noted was that they didn't want to be late again this time around, so that may have also been a factor there. So I don't buy the argument that this was all about politics. I know a few commentators have been saying that, or that was more out of pity than economics. Again, I don't buy that argument. Most economists coming into this year, the consensus was for a rate cut in May. Economists, including ourselves, had pushed it out, the consensus that is. I know some had stuck to February, and then as we started the year, that started to creep back again to February, mainly on the back of economic data. It had nothing to do with politics. And of course, the Reserve Bank and the economists all look at the same data. And then when we got that December quarter inflation numbers at the end of January, it pretty much became the consensus that the first cut would come in February. So I think that's all about the economics. It's not the politics. And looking forward, I think it's still going to be about the economics. There probably won't be enough further information to get the RBA over the line into an April meeting. So I think they'll probably wait out to May, but by the time we get there, I suspect we'll see inflation again a little bit less than what they're allowing for the March quarter, and consequently they'll feel confident to cut a bit further.
So not political, but we are in an election cycle waiting to see when it might be called. What would your advice be to Anthony Albanese?
Well, I don't want to tell him what to do in terms of the timing of elections, but I do think that now is not a bad time. The Labor is a little bit behind in the polls, unlike the situation going into the 2022 election. So things have flipped around in that sense. But there's also the benefit of incumbency, and the coalition have to win something like 22 seats. So you could argue that, short of a massive landslide, Labor probably gets back in the sense that it's got more seats than the coalition, and then it has to form a coalition with two coalitions there, form a coalition with minority parties like Hills and Greens and so on. And so that's I reckon that's probably the way we end up going there. But you could argue there will be a little bit of a feel-good factor for those with mortgages now, and therefore it makes sense to call an election on the back of that, because if you wait till April to call an election for May sometime, it may have come after a period where the April RBA meeting, which is on April the 1st, April Fool's Day out of interest, leaves rates on hold and may sound kind of hawkish to some people. So perhaps best to take what they've got now and make the most of it with an election for either late in March the 29th, or I think it's April the 5th or thereabout.
All right, what do you think, or what do you make of reporting season so far, Shane?
Well, this time a week ago it looked pretty good, but in the last week it has deteriorated. To be honest with you, for the average company, I think it's actually quite good. You can see in the chart there that we've now got about 60% of companies reporting profits up on a year ago. If you go back a couple of years ago, that was down as low as below 50%. Likewise, dividend, the mustard yellow coloured line there, similar story, a pickup in the number of companies raising their dividends on a year ago. So that's a positive sign. The average company is starting to do better compared to the situation we've seen over the last couple of years when profits were falling. Flip side, though, is that I think the last week was dominated by bad news from large cap stocks, particularly the banks. We had three of the big banks and one of the smaller banks, Bendigo, reports, and those numbers were a little less upbeat on whether it's basic sales activity by the banks or whether it's non-performing loans, and that got the market concerned about a sector which has been a key driver of the market over the last few years now. And then, of course, the other issue was BHP and Rio and resources stock generally. Interestingly, when you look at the charts for BHP and Rio, they sort of had a bit of a dip after their earnings numbers, and now they've come back again. But energy stocks are down. So that seems to be what's driven the overall market and overall sentiment. So again, I think the problem for the share market this week has been you've got this anticipation of the RBA cutting, then the RBA was cautious, money markets have wound back their expectations for further cuts to some degree. Then we had this anticipation of stronger earnings numbers or less negative earnings numbers. They weren't quite as good as the market was hoping for. Again, you've got some profit taking on the back of that. But I tend to see all of this as corrective rather than the start of a major bear market. I think if we're going to get a major bear market, it probably comes out of the US, not in Australia on its own.
You mentioned before the 1st of April in terms of the RBA, but that's also when the trade policy reviews are complete. What sort of, I guess we've had a little bit, as you say, a reprieve from some of the noise this week, but I expect we can continue to hear more from Trump.
That's right. If the 1st of April is going to be a joke, it's not the RBA, it's what goes on in the US, to be honest with you. You either laugh at all this stuff or you're aghast, particularly the way he treated Zelensky from Ukraine. It sort of made me think that maybe he's trying to send a message to Canada and Greenland and Panama. You know, they shouldn't pick fights with big neighbours that want to overtake them, take them over perhaps. Maybe I'm being too cynical here. I suspect that trade review will lay some of the groundwork for further tariffs. The reciprocal tariffs will probably follow soon thereafter, and it looks like we're going to see tariffs announced, as Trump has foreshadowed in the last week, on things like cars, pharmaceuticals and semiconductors. So it looks like the first few weeks of April are going to be fairly tumultuous, with more ramping up on the tariff front. And there's a danger for that in Australia, because the value of our pharmaceutical exports to the US are roughly double that of iron, steel and aluminium exports to the US.
Now, the people have spoken. When I say the people, I mean my producer, Marius. He wants to know what you think about Boy Swallows Universe. I've read it. I have to say I prefer Trent Dalton's other book, Lola. I found it a little bit hard to get into, but it's brilliant once you've finished. Your review, because it's also a Netflix show now.
It has, and I have seen the Netflix show. Look, it's not my favourite thing, but I'm the sort of person who likes to read good, happy stories, cheerful stuff. And there was a bit of uncheerful stuff, or not so cheerful stuff, in Boy Swallows the Universe, and particularly in the Netflix series. I mean, it's an amazing story. To some degree, it reminds me a little bit of Jodie Vance's story. Was it Hillbilly Eulogy? How people come through that sort of. I mean, I've been lucky. I've been really lucky with my parents, stable and great upbringing, all that sort of stuff. So it's good to read this sort of stuff and know it and understand it. But I did find a little bit depressing.
Yeah.
So yeah, interesting. It's a great book though, and behind me is a whole bunch of Australian great books in one direction or the other. Maybe over there you're looking.
Yeah.
But anyway.
Yeah, I felt the same. I feel incredibly grateful that was not my childhood. And I think if you read Lola, his other book, that's even sort of more dark in some ways. But yeah, anyway, really good stuff. We always love to get your book reviews and all your economic insights. Have a fabulous weekend, Shane. Thank you.
Okay, thanks, Juliet.
Shane Oliver, Chief Economist from AMP. We love Shane. All right, the stock of the day, Guzman y Gomez, Adam Dawes from Shaw & Partners, June Bei Liu from 10Cap joined Andrew on the call.
There's a little bit of profit taking coming in there. On those same store comparables, their corporate stores, they're going to be doing some franchise and some corporate stores in there. Their corporate store margin is 17.8%. That's bloody good for a margin on that corporate side of things. They have aspirations to open over 1,000 stores here in Australia. So it actually does look like that this rollout, and that's potentially one of the reasons why I think that slowing of those same store sales, same store openings is pulled back a little bit because the market is expecting higher store rollout.
I'll put it on the hold as well, and I wish I held the stock this long.
Yes, you got rid of it day one, didn't you?
No, but look, it's a great company, lots of growth opportunity, but it is trading on 300 times. Look, it is a fast-growing company. You should look at the near-term multiple, and because it's only a few years ago it turned profitability, so the earnings leverage is enormous. So they shouldn't be looking at the multiple, but it is very expensive and it's done really well. That's why we have a bit of profit taking.
All right, well, despite a positive start, it was another down day. And let's have a look, though, at some of the stocks that did well. Domain, this absolutely really skyrocketing on the back of that bid from a US firm, up more than 39%. Main Pharma had a very solid session as well. Now, of course, Nine owns Domain. It was up 20%. It reports on Tuesday. And Telix Pharmaceuticals, I mean, that result was just an absolute cracker. Shares up 13%. Let's have a look at what we're seeing in the downside. We touched on Guzman y Gomez there. 13.5% decline. Investors worried about the outlook for its US business. Of course, it's a very saturated, competitive QSR market in the US. REA, the main competitor to Domain, being sold off on that news. Bega falling after its numbers. News Corp, Star Entertainment again a laggard. Let's have a look in the small end of town, kicking it off with Main Pharma, Energy One, Alcidion, Veeam and Image Resources, while the laggards in the small end of town were 4D Medical, Lindsay, 3P Learning, Mika Metals and Bougainville Copper. All right, what are we looking out for tonight? S&P Global PMIs, US home sales, consumer sentiment, and another FOMC member speaking, that's Jefferson. Next week, we've got about 170 companies reporting, including Iris, Lovisa, I think Ampol as well, Woodside, we've got Qantas, Woolworths. We also get January CPI, just the monthly figure on Wednesday. Thursday, we get US GDP, and on Friday, private sector credit data. So it will be yet another busy week on the overall ASX, but in a very busy week this week in terms of the fact that we also had the RBA cut, we had the jobs data, we had wage price index, we had concerns about tariffs, geopolitical unrest, a lot of companies reporting. We've ended the week lower by more than 3% over the past 5 days on the ASX, now about 3.5% off all-time highs, and today the ASX 200 falling by 27 points or a third of 1%, 8,296, so falling below that 8,300 point level. The SIBO there off by a tenth of 1%. We do hope you have a very restful and safe weekend. Remember, you can catch up with all of our CEO interviews, also analysis from analysts on these reporting season updates. Ausbiz.com.au, we've got a special reporting season tab. We've highlighted a lot of the numbers as well and interviews that we did in our Off the Clock newsletter, which comes in your inbox at 9 a.m. If you haven't signed up, again, ausbiz.com.au, you can sign up. And we'll do it all again from Monday, 9:45 a.m. Eastern. We'll see you then.